Kevin Hincks, co-host of Fast Market, is here with me on Schwab Network, and taking a look here at the markets. As at least we got the unchanged part, and we're going to start getting some of the language. Some of your thoughts.
Hey, Nicole. Yeah, the Fed stays flat, stays unchanged at 4.25 to 4.5 range. Not completely expected by the markets, but that's not the important part. Now we wait for the 2:30 Eastern time press conference, where we'll get much more color from Jerome Powell, who, unless I'm wrong, the last time he spoke was at the Economic Club of Chicago. That sent the markets tumbling down about 1,000 points in the Dow. We'll see how he presents where he sees the economy and interest rates going in the future. So yeah, so far no news, no move from the Fed, and we sit and wait for Jerome Powell's press conference. Stocks are, the S&P's up slightly, and with the Google Alphabet news and Apple, the NASDAQ is down slightly, Nicole.
And here you go, another gift from Jay Powell, just like last time. First statement: risks of higher unemployment and higher inflation have risen. There you have it. So let me check this out. The Dow is still moving higher, though. Maybe I was thinking that he was going to be making some of these same statements, that the tariffs provided uncertainty, they caused risk for inflation and unemployment. And this is what he said a couple of weeks ago, and that's what crushed the markets. Today, maybe the market will be a little resilient because they already heard this story.
Yeah, exactly right. The statement that he put out, he's only reiterating what he said 2 weeks ago. So maybe it's just not as big of a surprise to the markets as it was a couple weeks ago. Because let's face it, what he's really saying is he doesn't know, right? He's trying to speculate on what he sees could happen, and that's if the full throttle of the tariffs go into place, when we know that there's conversations going on behind the scenes, and the China conversations that are going to start this weekend in Switzerland. The news out this morning that the EU and the United States are very close in the final stages of a deal on autos and steel tariffs. So I think, yeah, the market is basically unchanged based on his comments. Nicole?
Well, at least he knows the swings in exports have the number of exports and imports. He knows that has affected the data. He's so data driven. At least he knows and is acknowledging that that negative print that we saw in GDP came from the record number of import-export, that trade deficit number, because everybody was rushing to import rather than have tariffs. So that skewed the number. So at least it didn't scream recession to him, and for him to say the GDP was down in negative territory. He didn't say that. He's actually noting some of the trade being skewing some of the data.
Yeah, maybe he's going to give a more balanced view of the market and acknowledge that when that when imports jump by 41%, remember that takes away from GDP, that there may be a slight ding to GDP that will probably has a good chance to be revised higher in the coming months. So yeah, at least he's acknowledging the realities, right? Rather than the rampant speculation when the GDP number came out that this was causing, that all the problems it would cause, when really it was almost considered a one-off event because of imports and pulling those in before the tariffs.
Yeah. Kevin Hincks, great to see you. Thank you so much.